I'm Judy Shaw for NYSE Floor Talk. Joining me today is John McCluskey. He is President and CEO at Alamos Gold. John, it's great to see you. Thanks for joining me.
Nice to be here. Thank you.
My pleasure. Now, a quick note to our viewers. This interview is for informational purposes only. The NYSE doesn't recommend any investments or investment strategies. Now, John, you've described 2020 as transformational for Alamos. Apart from managing through the pandemic, can you describe what Alamos has been advancing in the past year?
Well, we had a couple of very key deliverables for 2020, and we hit them both, which is a big change for us as a company. The primary objective was to complete the tie-in of the upper and lower mine at Young-Davidson. This was a major project that took almost 5 years to complete. Effectively develop this mine in a way that allows us to mine it for the next 15 years. It involved sinking 2 shafts down to 5,000 feet. It involved all the build out of mine infrastructure at that level, so that the mine could operate at a far higher rate and in a fully automated fashion right through to the end of the mine life. So it was a big accomplishment to pull that off. It cost roughly $350 million to complete that project, and it came in right on time and right on budget. The second that I guess I should mention, we made an acquisition in 2017 of an asset called Alamos Gold. This was a big step for us. It was another Ontario gold mine. When we acquired it, it was relatively small, but they had made a significant discovery that we thought was going to grow. And of course, since we acquired it, we've really transformed it. We've pushed the contained gold from about 1.8 million ounces. We're up just close to 5 million ounces now. We've pushed production from roughly 100,000 ounces a year. We're up to 150,000 ounces a year, and on the back of all that exploration success, we came up with a phase 3 study, which points the way to developing the mine for it to be a 240,000 ounce a year producer at first quartile costs, all-in costs coming in at roughly $600 an ounce. So those were 2 major accomplishments for the year, and it's really transformed us as a company.
Okay, now you've been particularly focused on exploration across your operations and projects, but you've spoken with enthusiasm about Island Gold. Can you drill down on that?
Well, certainly. I mean, Island Gold is it's a great Canadian discovery. There's been few like it really in the last 20 years. It's high grade. It's a really extraordinary ore type. It's quite easy to recover the gold. We get about 96% recovery of the gold in a conventional milling operation. And since we've acquired it, we've drilled it very aggressively in order to demonstrate the economics of transitioning this mine from a ramp operation. We essentially access the areas we're mining now through ramps, which allow trucks to drive down to the area where we're mining, and that's roughly 15 feet deep. But with the discovery unfolding as well as it has been in the 3 years since we acquired the mine, there's a real necessity to envision how this mine will look to fully take advantage of the exploration success. In other words, you wouldn't want to continue mining the deposit at 150,000 ounces a year, for 40 years. That doesn't make sense. So essentially, we increase the scale of the operation. We transition it to a shaft system as opposed to a ramp system, and that allows us to, fully take advantage of all the new gold mineralization that we're finding. It's also a much greener approach to mining because running diesel trucks underground, we would have to run a fairly significant fleet given the depth we would be at and the size of the mine. It's a much better way to go with a shaft. The shaft is basically running off the power grid, which in Ontario is it's supplied by hydroelectric power. So we effectively reduce the carbon footprint of the operation by 35% by transitioning to a shaft operation.
Okay, now you recently raised your dividend. What type of reaction did this generate? Was it a positive reaction?
Well, absolutely. Just as a cut in dividend makes investors disappointed, a rise in the dividend makes them very happy. And we've been raising the dividend over the last couple of years. Earlier, it was being raised in anticipation of a big jump in free cash flow. But now, of course, we're delivering those free cash flows. The operations, we made $144 million last year, and it seemed very reasonable with the outlook that we have to continue to raise the dividend. So we bumped it another 25%. It's got about a 1.3% yield right now, which is it's a good yield. And we envision as cash flows continue to grow, we'll be able to raise the dividend even further.
Okay, and finally, John, how do you envision the next few years unfolding for Alamos?
Well, we have a very exciting outlook ahead. I mean, the discovery that we've been working on at Island Gold, that is going to continue to unfold. Very few mines, particularly high-grade underground mines, ever make it to 5 million ounces or greater. That's getting to be a very, very sizable operation. And we've just been so successful in drilling that. I can't see that stopping anytime soon. I think that ore body is going to continue to grow in size. And with the plans that we have, shaft operation, boosting that production probably up to around 250,000 ounces a year. That's sort of the objective right now. The cash flows that we're going to generate from a mine like that are significant. Of course, Young-Davidson, it's just hitting its stride. We've actually reported on 1 full quarter of operation at Young-Davidson from the new infrastructure that we put in. Of course, it was a great quarter. Our costs have come down roughly $10 per ton in terms of mining costs. That's a pretty significant impact on a cost per ounce basis. We have another sort of step in that ramp up to look forward to with the way the mine, we were operating the mine at 6,500 tons a day. We're currently operating it at 7,500 tons a day, but the full capacity will be 8,000 tons a day. And we expect that we're going to be there by the middle of this year. So that will push production from roughly 135,000 ounces last year. We'll have production over around 200,000 ounces this year, and it will be at lower all-in sustaining costs. And this is all based on the economies of scale that we're enjoying operating at the higher mining rate.
Okay, John, well, it's been great to talk with you. Thanks for joining me on NYSE Floor Talk.
It's been my pleasure. Thank you.